Hey guys, we are done with chapter 7 and we are going to get started with chapter 8. Chapter 8 would be a great lesson for us to be in the same room together because it is a little bit more difficult because there's going to be some things that you haven't heard about before, the things that adults have to deal with as far as retirement and things like that. So it's going to be a little bit different, but it's not so hard that you can't understand it and learn about it at home. If you have any questions, I'd also encourage you to ask your parents about maybe some of these terms. Hopefully they know what they are and they could help you out. But also the online Foundations Digital or foundationsu.com.org or whatever it was, the Dave Ramsey site, that ought to help you out as well. So retirement, what's important? Well, from the very first day I asked you what would you do with $1 million, and hopefully some of y'all, if you remember, you said you would invest, and it's really, really important to get started early. If you guys remember from chapter 2, Ben and Arthur, one of them got started really early, didn't invest all that long, and the other one started a little bit later and invested a long time, and the one that started earlier had the more money. Compound interest works amazing things for you if you get started early. So I'm going to encourage you to get started early, and we're going to talk about investment. So this is a fun lesson because some of you guys are wondering, how do I get started? How do I build that retirement fund? How do I get a whole bunch of money? Well, we're going to learn right here in this lesson of investing in retirement, chapter 8. There are some terms you're going to have to understand and know, such as diversification. He's going to talk about that. Diversification is basically spreading your money around. Don't just have it in one thing that you hope will work out. You really need to have it in multiple things. And so we're going to talk about that. We're going to talk about, let's see, there's some other terms here. Liquidity. Liquidity is how quickly you can get to your money. And we're going to talk about the risk-return ratio. The risk-return ratio, you need to understand that as the risk goes up in a retirement account, in a retirement fund, and whatever it is that you're going to put your money, as the risk goes up, the possible return will be up as well. If the risk is really low, then the possible return is going to be low. What you need to figure out is, where are you at in your journey and how much you trust your investments. So are you a really risky type and you want to have a big return, or you are maybe not so risky and you want something very stable that you for sure are never going to lose your investment? Then you can be down here on the very stable and the low return. So you're going to be low risk, but you're going to be low return, but chances are you're never going to lose any money. Up here, even though the risk is high and the possible return is high, because the risk is high, you could lose it all. And so you got to figure out where you are in between. Are you a risky person? Are you a stable, very stable and not so trusting of the stock market or whatever it is that you're going to put your money into? So you got to figure out where you are on that spectrum. And so we're going to talk about some really risky investments. We're going to talk about some very stable investments, and we're going to talk about a little bit of everything in between. And we're also going to talk about what I think is the best type of investment and what Dave Ramsey would recommend. And hopefully it will encourage you to start investing. You can start investing even right now. Let me look at a couple of these other things we need to know. Make sure you remember what the five steps to financial freedom are. Remember, the very first one was to have an emergency fund. The next one was what? Do you remember? Number 1 is to have a $500 emergency fund. Next one was to get out of debt. Next one is to pay cash for, you know what it is, your car. And the next one is to pay cash for college. We've worked all the way up to the point where right now we are on the very last one, and the very last one is to build wealth and give. So a couple other little things you should know about, let's see. You're going to learn about, like I said, the types of investments. When you get to the types of investment, which is in section 2 of this section, there's going to be a whole bunch of different things, such as certificate of deposit, which is just called a CD, or money markets, or single stocks, and bonds, and mutual funds, all those types of things. those are the types of investments that you can invest in right now. Once again, some are going to be risky and some are going to be very, very stable. And so what you got to do is you got to find out what you're comfortable with. What I'd encourage you to do during that time, when you get to those places and you've gone through the Section 2 videos, and there's, I think there's 3 or 4 of those, and you get your way through there and you start to understand some of those different investments, ask your parents what investments they have. And so they may say, well, I have some annuities, or we have real estate, or we have a money market account, and we have mutual funds, whatever it is. All of those that I just mentioned, those are all really good investments. And so maybe they may have things that are even riskier. They may have, futures or golds or some of those other ones. And so just ask them what they have, why they have it. Hopefully you're not prying so much, but to find out how much they have, but just to know what they have. And so maybe it'll spark some conversation between you and them as far as this is concerned. We're also going to talk about the stock market and what is safe and what is not so safe. And if you've been noticing lately, the stock market has been pretty volatile. It's been going up and down, up and down. And before that, we're going to talk about how there's a bull market and there's a bear market. Before, we had a long, long time bull market. And a bull market is when the horns of a bull go up. And so that means the stock market is going up. But if a bear is going to attack you, a bear attacks you with claws coming down, that means the stock market is going down. And so right now we are in a bear market. We're starting to head towards maybe a recession possibly as a result of COVID-19. Hopefully not, but that's kind of where we're heading right now. So it's not so good, but we were in a bull market for a long, long time, the last couple of years. And as a result, stocks have been going up and up and up. Now they're going to come down, but that's normal. It doesn't matter if it's 9/11. It doesn't matter if it is a 2008 recession. It doesn't matter what it is. And the stock market is going to go up and down. But over the life of the stock market, as far as we're talking about, mutual funds, for example, and over the life of the stock market, it averages about 12% return. So there's a lot of good investments out there that you can find. And even though the stock market's going down, some people say that's a bad thing. It's not necessarily a bad thing if you are investing, because now you're buying stocks for companies, and you're buying those stocks, and stock is a partial ownership of a company. And so when you buy those stocks, you are a small owner of a company, and now you're getting them for cheap. And whenever it's a bull market, that means stock market's going up, stocks cost more money, and now you can spend the same amount of money in a bull market as you did in a bear market, and the bull market's not going to buy you as much. Okay, that's kind of like inflation. But if you bought a whole bunch of that stock, let's say it was AT&T, in a bear market economy, then you buy all that stock of AT&T in a bear market economy, and all of a sudden a couple of years later we get into a bull market economy, then now you can sell that stock for a much higher price than what you sold it, or what you bought it for. And so that's the difference there. So if you have any questions, feel free to shoot those to me, and I'll help you out best you can. But we are jumping into Chapter 8. That's all I wanted us to do today on Friday, is go over Chapter 8 stuff, kind of an introduction. Except for you're going to watch a video. You're going to watch video 1 from Chapter 8. And then you're done for the day. Have a great weekend, and hopefully we'll see you soon. Take care, Bulldogs.